Mind the Gap. Hi, Dean Jenkins with Follow Me Trades, and this is the market update for the week coming up of June 22nd, 2020. And just shout out to all the fathers. Happy Father's Day. Hope you had a really good one today. I'm recording this Sunday evening. All right, I'm looking at the S&P 500 daily chart, and I say mind the gap. You know, last week I talked about unusual trade setup where we had what's called the inside price bar, and I did take that short last week and didn't work out. Price initially went down, that went up through my stop, which was at the top of this price bar here, so that didn't work out. Hey, welcome to trading, right? Trading's about probabilities, not certainties. We took a little small loss on that one. It happens. But meanwhile, we've got this gap, and what I mean by a gap is the distance between one day's closing bar and then the next day's bar. And we got this, you can see this space here. It's called a gap. And I say mind it. I'm going to switch real quick to a 60-minute chart so you can see the gap a little more clearly. So here's the gap, this area here. I'm going to draw an ellipse so you can see it. There is the gap. Okay, the distance between the closing of one day and the closing of the other day, and there's just space between them. Okay, notice how even price did go down and then it came up, it gapped up. Notice how it is stalling. It's come up to this gap a couple times, and that gaps often present areas of resistance, an area that price has a hard time getting through. So on the daily chart, we've got this gap, and we've seen price come up to it. And on Friday, we had a down day. And so it's important to watch this. If price goes through the gap, up through this purple line, about 31.75 on the S&P 500, then it's overcome that resistance and probably going to go on to some more highs. If it continues to bounce off it, then we could go down. Now, where are we at on the overnight futures market? S&P 500 futures, this chart on the right, opened down pretty sharply, and it's creeping its way back up. So the open on Monday is kind of up in the air. So we just have to wait and see and trade the realities of it. I think the bias is to the downside. I've been clear about that for the last, I don't know how many weeks. Let me point out a couple articles that you just might find interesting. Here's an article from Motley Fool. And these guys are pretty smart. They've been on the right side of the market for a long time. They're investors, and they're fundamental investors, different than what I'm doing. But here's this article from the Motley Fool called "Get Ready: 10 Reasons for a Second Stock Market Crash is Coming." And you can go read the article, and you can read their thesis, their reasons, 10 reasons why a second stock market crash is coming. And I think they're right. And we'll be ready for that. Meanwhile, we'll trade the realities, but they lay out a really strong case for why you should be watching for another move down in the market. Here's another interesting article. I'm a news junkie, I admit it. This is from Seeking Alpha, and it's "The Rise of Robinhood Traders and Its Implications." And there's been a really interesting phenomena about, with people working, staying at home more, with casinos shut down, with sports betting shut down, all those factors coming together. There's been an incredible rise of people participating in day trading, very similar to the dot-com boom. And some of them are fairly new investors, and Robinhood is kind of a representative brokerage firm that folks are using, and a lot of these folks were gambling. They're making bets on companies, just that had been beaten down, and gambling, betting that they were going to come back up. And there were several very popular companies to trade amongst the Robinhood and folks like that just getting into day trading. Notably a company like Hertz, the rental car company, who has declared bankruptcy, and people were gambling, day trading, and not all day trading's gambling. Don't get me wrong, but they were gambling on Hertz, and to the extent they made I'll bring this symbol up. Why not? As Hertz got beaten down, down to nearly zero, and people started buying it, and then they made some good money, but and to the extent that Hertz saw this happening and said, hey, even though we're in bankruptcy, they made this unprecedented move that we're going to issue $1 billion worth of new stock to help finance our way out of bankruptcy. And the SEC was initially on board, and finally that whole thing got unwound, because guess what happens to shareholders in bankruptcy? You're the last in line. And then in the disclosures for the proposed equity issue, they said, hey, shareholders are probably going to get zero. And, why would you give Hertz $1 billion when you're going to get nothing? So it's back down. There were several, a lot of airlines, other companies, oil drilling companies, stuff like that. People were just gambling. And what that ended up doing was making a really difficult situation for short traders who were, saw the setup, saw the fundamentals eroding, and went short on stuff, and then people came in and drove it up kind of unexpectedly. So all that said, it's a super interesting and kind of a difficult market to trade in with all those factors in play. So what do we do? What do we got coming up here? Wall Street Breakfast is a phenomenal newsletter. It's put out by Seeking Alpha, and each morning they kind of give you the heads up on what to watch for, what's going on in the market, the big deals, and like here on Sunday they give you the week ahead. And some of the big deals coming up, we got Nike reporting earnings, we got Apple doing their big event, and then here's some important things to watch, some reports coming out. On the economic front, reports on existing home sales, jobless claims, consumer spending, and Q1 GDP revision will be the headliners. So those are big deals to watch next week, because the likelihood, based on the reality of the situation, is that those economic indicators are not going to be good. And so I'll be watching, how the market responds to those economic indicators. I'll be watching this gap. And if we reverse sharply off this and head down, I'll be happy to short the SPY again and go with the probabilities. And, if the setup's there, well, good chance we'll get a win. So that's what I'm watching for. The economic indicators, the reality. When you just think about, what's happening to GDP, right? It is unprecedented hit. 20 million people unemployed. Even with the reopening, there's a huge economic impact to the coronavirus and the shutdown and all that. And, corporate earnings were not good. They didn't give guidance, couldn't give guidance. And, getting ready to head into the next round of earnings kicking off here in early to mid-July. And I don't think the news is going to be that great, except for a handful of companies benefiting from the situation. So, I'm bearish. I'll be careful. I'll wait for the setup, use risk control. But that's kind of where I stand. So hope that all made sense. Watch this level through the next week. About 31.75 on the S&P. Watch for reversals, and if reversals happen and it heads down, those could be some real good short opportunities. Lots of ways to trade that. If it breaks through it, well then, wow, it'll continue up. All right. As always, I welcome your comments, your questions, and your feedback. Thanks.